Tuesday's CPI showed a 3.2% rise in costs compared to a year ago, marginally higher than what Wall Street expected. Despite the modest increase, some metrics surged compared to where they were a year ago. Auto insurance premiums shot up more than 20% compared to 12 months ago, and it was the second biggest jump in the CPI behind only frozen, non-carbonated juices and drinks, which, you know, your car insurance matters a lot more than your frozen orange juice. Third highest increase was admissions to sporting events, up a mere 11% over the past year. Here to discuss the impact that car insurance rates are having on the consumer and the investing opportunities in car insurance as well, Andrew Kligerman. He's a managing director at TD Cowen, specializing in insurance and insurtech space. Andrew, good to see you. The interesting thing is when we're looking at the car insurance rates soaring, and surely people who have to buy it have noticed, we have not seen necessarily commensurate earnings. For instance, Allstate has had a series of disappointing earnings reports because of how much they're paying out for lost costs.
Right. So think about it this way. You talk about the CPI now being up in that 3 to 4% zone, but think about the economic inflation over the last few years, and let's think about the economic inflation to insurance components. There was a point about a year and a half or two ago that used car prices were up 40+%. And on top of that, we had labor inflation, that, you know, mechanics in particular, that was up 10%. Medical was a little more moderate. Used car parts were up dramatically. So
rental cars, that went up pretty dramatically.
Massively, right. So insurance, auto insurance in particular, home insurance too, right? Construction, terrible. So they got a disproportionately bad proponent of economic inflation in a high economic inflation environment. Now, overlay social inflation. There are now litigation.
When you say, right, I was going to say this is insurance jargon for really the rising costs of lawsuits, litigation, right, verdicts, and settlements.
Horrible, Contessa. I mean, we look at charts on personal lines where social inflation is 3, 4, 5 points higher than what we would see in just your traditional loss costs. So there are a lot of issues out there with social inflation.
In some places, we know that Florida, for instance, has tried to grapple with the issue of litigation and the cost it means to insurance. But in the meantime, then let's flip that script a bit, Andrew, and talk about the opportunities for investors, because you have Allstate and Progressive both up 40% over the last 12 months. Why?
Correct. So here, it's kind of a tale of two worlds. So I'll start with Allstate, though. They have been losing money in auto insurance for the good part of 3 years. And they've been diligently going to regulators and asking for price increases. But, you know, you've got, you know, a lot of these regulators, and it goes state by state. They're elected by, you know, the consumers. So they're not going to give you the rate right away. And what we saw was this massive move in loss costs, economic and social, at the same time not quite getting enough rate. Finally, the tougher states, California, New York, New Jersey, have come through. Allstate in December got 30% in California, roughly 20 in New Jersey, and 14.5 in New York.
And that's why people are seeing their bills going up when it comes to auto insurance. Andrew, I'm going to have to leave it there. Right. Thank you so much for joining us on the Newsline today.